Thank you for that intro, David. I appreciate it, and thanks for having me on again. Um, Today, I kind of thought I would talk about position management slash capital management with respect to the mining stocks, especially the junior mining stocks. Over the course of the summer, the market got kind of frenzied, and I was getting a lot of emails from subscribers asking for advice on whether they should hold positions that they had big gains in. I'm sure everyone out there is sitting on some stocks where they've got 3 to 5 times capital appreciation, maybe even more in some cases. And how do you decide when to take profits? Should you sell your whole position, et cetera? So, and it's a good question. And quite frankly, it's really kind of up to each individual, and it's kind of based on each individual's tolerance or appetite for risk taking. And it's really more of an art than a science. If you buy a stock at 10 cents, a junior at 10 cents, and all of a sudden it's at 50 cents, it's like, what do you do with it? Is it going to go higher? Is it going to go back to 10 cents? And the answer to those questions are it's specific to each individual company's situation, and it's also specific to the market. I mean, you can't forget about overall market risk. So in finance class you learn that with a stock there's specific business risk and there's market risk that affects the prospects for any stock. So um, the way that I kind of look at it is, with each situation, when I invest in it, I look at the market cap and I say, okay, this is what the company has. This is what I think they'll have down the road. And if it looks to me like there's at least say 3 to 5 times upside versus say a 50% or complete loss of capital, then I'm probably going to put some money into the situation. It's all based on kind of a risk return trade-off. So, and when you're sitting on a junior mining stock that's run up, 300%, 500%, whatever, you got to kind of look at what were the variables that drove that move higher. Was it good drilling results? Was it the release of a resource estimate? Was it the company might have signed a joint venture agreement with a large mining company, and the mining company might have taken some sort of equity interest in the company? And those types of events can change what your assessment is for the future valuation of the company, but you still have to analyze all the risks that are involved with that particular company and the market versus where that company's market cap is now and where you think it's going. So the way that I see the risks for and I'm primarily talking about the junior exploration mining stocks, but it applies to near producers and even producers. I mean, you've essentially, you've got resource development risk. Is the company, you may have a new project that all of a sudden is turning out some great drill assays. But there's a risk that, they may have gotten lucky with what they hit. And they may have another series of drill assays or several series of drill assays that don't show a lot. And that's going to affect the stock negatively. There's metallurgy risk. To what extent and by what methods, assuming a resource is eventually developed and can they extract the mineralization out of the rock? That's kind of the simplest way to look at it. And there's risk of that. There's permitting risk. There's financing risk. I mean, there's really risks all the way up to the first pour. I mean, I've got some near producer stocks that I cover in my mining stock journal, and they're basically shovel ready, but they're very specific about saying maybe they're waiting for some final permits, and they're very specific about saying they have not made a construction decision yet. So there's risks even up to that point. And even through construction, there's risks. So, I mean, there's all kinds of risks that I think a lot of investors kind of forget about in the excitement of when their positions start to appreciate and when some positions kind of go parabolic. So a good example that I'll use is Discovery Metals, which I love this company. I love the prospects for it. I knew about it because I owned Levon Resources before it merged with Discovery Metals, and I used to speak to Ron Tremblay, the CEO of Levon, quite frequently. And I actually recommended this stock before the merger closed. When the merger was announced, Discovery Metals was, roughly, I don't know, 20 cents US, and the market cap was around 15 million, and that was in June of 2019. And I recommended it at the time. If you only had access to over-the-counter stocks, or over the OTC 5-letter symbols, and not the TSX stocks, you had to make this play by buying more Levon. And so that's what I did, and that's what I recommended in my newsletter. Fast forward to this year, and really the last 3 or 4 months, and Discovery's market cap goes from 15 million to, at its height this summer, 793 million. The US symbol for the stock traded I think it had a high close of $2.14. And as this was happening, I'm looking at my basis in this stock, and my cost basis was, for most of the shares, was below 30 cents. And I started taking profits when the stock crossed over $1.70. I didn't foresee it running up to $2, but certainly that's what markets do. And I never try to high tick a stock, and I never try to bottom tick a stock. But when I looked at the catalyst for what drove this thing higher, it was we were in sort of the big frenzy that hit the juniors in July, and also Eric Sprott. It was announced that he increased his stake in the company by a considerable amount, and I think that kind of gave the stock a life of its own, and it drove that market cap up to almost $800 million. Now, it's quite possible that down the road, Discovery is going to have a market cap 3 times $800 million. I don't know. But the way that I assess where a company is in its development curve now relative to the risk specific to that company, and where the market is and where I think it's going. And at that time in July and early August, I thought that the market was ready for a corrective pullback, which we've gotten, and I think that's healthy. And currently, the market cap is around 500 million. So I'm actually looking forward. I haven't spoken to Taj for a while, and I'm looking forward to seeing this presentation so I can see where they are in advancing the Cordero project. And I want to see if they have any plans for getting started on some of their other projects down in Mexico, which are highly prospective projects. And essentially, when you're investing in Discovery, you're probably just looking at the silver project, the silver polymetallic project, the Cordero project, which right now they could put in a small heap leach open pit operation and start generating cash flow. But there's probably a bigger resource underground, and there's probably room to expand the pit resource. And so I think they're going to tackle that before they even think about moving into production on some part or all of it. So the way I look at it, you invest in Discovery here, and you're getting the Cordero project, and you're getting the other projects that it has down in Mexico for free. So and at this point, I mean, I didn't sell my whole position. I probably sold about 2/3 of it between $1.70 and $2. And now I'm starting to evaluate whether it's time to add. And the variables that I'll look at, well, part of it will be based on what I see in this presentation coming up. And part of it's going to depend on where I think the market's going over the next 3 or 4 months. So with that, let's get to the main event. And I hope everyone found this a little bit helpful in how they look at their positions and in position management. Thank you.